Fellow trader, what if one mathematical pattern could explain every crash, recession, and market correction in the last 45 years? This little-known mathematical pattern behind 45 years of stock market crashes and recessions now predicts we're approaching a crisis of epic proportions. Why those who fail to understand this powerful pattern could lose everything again. Plus, exactly how those who know this pattern can potentially net $1,900, $3,000, even $10,000 in monthly income or more with 93% accuracy. As you're about to learn, this pattern not only explains why the markets have plummeted, but also why a small group of savvy investors and traders have been able to profit massively at every turn, with a massive potential correction on the horizon. I won't mince words. You must understand why this pattern has determined our fate, how it works, and exactly what you can do to harness its power before it's too late. Those who fail to understand the implications of this pattern will experience the wealth destruction so many investors experienced in the devastating crashes of 2000, 2001, and 2008, while those who know the simple secret to harnessing its power can use it for unprecedented profits. The simple fact is, you do not have to be a millionaire investor, a hedge fund manager, or even an experienced trader to take advantage of this pattern. While this pattern moves massive markets, it also controls smaller trades that can be executed on a daily basis. This gives everyday investors the ability to leverage its uncanny accuracy and predictive ability to create daily, weekly, and monthly income. If you need more income now, that's the best news of all. Because there's no need to wait for the next crash or recession, you can begin trading this lucrative pattern as soon as today. But before I show you how to do that, let me show you the undeniable history of this pattern. The recession of 1969 to 1970. See the pattern? Increased deficit spending after the Vietnam War led to a mild recession. The profits, however, were anything but wild for those who understood the pattern. They more than doubled their money. The recession of 1973 to 1975. This recession carried through the end of Nixon's final years in office and into Ford's presidency. It was accompanied by a stock crash in the late 1973 period and early 1974 that destroyed 45% of the Dow's value, a $2.25 trillion loss in today's dollars. Those who played this pattern properly saw some of the greatest three-year gains in history. The global recession of the early 1980s. This recession saw the highest unemployment rates since the Great Depression at 10.8%. Banks and real estate were hit particularly hard. Yet, those prepared with this pattern saw nearly a 400% positive boost in their holdings. The Gulf War recession of 1990 to 91. Following the Gulf War, we entered yet another recession, followed by unemployment so bad it led to a Bill Clinton landslide. Know anyone who also won in that landslide? Insiders who used this pattern to more than triple their money. The tech bubble of 2000 to 2002. We all remember this one, and yet few realize this caused $5 trillion in losses for investors. Those with knowledge of this pattern, however, were not able to only avoid disaster, but they bagged some of the greatest profits ever realized in the stock market. The crash of 2008. This is almost universally agreed to be the worst financial crisis since the Great Depression. Both investors and consumers lost trillions. As you might guess, those with knowledge of this pattern were prepared. They saw this coming and were able to ride the upswing to triple-digit gains. Could another catastrophe be staring us in the face? In each of these examples you just saw, there was a basic undeniable pattern. You saw the upswing and then how far each one came down. What's more, each one of those recessions were characterized by excess spendings. usually government and the Fed, but at other times by overzealous investors, as we saw with the dot-com bubble. So what does this all mean for us right now? Well, here we are on the chart. Sure, things seem great right now. Unemployment is down. The S&P 500 is on fire. Investors and consumers are beginning to feel invincible. And yet, we also know that since the crash of 2008, the government has gone on an $11 trillion spending spree. At the same time, the Fed has pumped into our nation's monetary base from $850 billion to over $2 trillion. These are alarming numbers. Combined with where we are right now relative to the pattern that you've just seen before every crash, it means we could be on the precipice of something disastrous. Maybe not next week or next month, but sooner than most think. And you need to be prepared. The pattern that paved the way to lifelong trading income, it's finally available to you. And it should be clear that typical buy and hold stock investing or even long-term trading strategies run the risk of being on the wrong side of this pattern. These could be losing a bundle in the process. That is especially the case as we approach what could be a cataclysmic shift in the base around behavior of this type of pattern. So what's the answer? The only way to find out is by joining ProTraderElite.com.